has not sold the goods to outsider. Okay, so can I say so easily we can calculate the unrealized profit is $10. So the next thing is, where is this $10 hiding? Right? Where is this $10 hiding? So the it's hiding in two places. One, this $10, right, is hiding in the net of the, right? So this $10, one element is here, the net profit of the seller. So I put it here. You see, where is the unrealized profit? The first part, this unrealized profit is actually in the net profit of the seller. Okay, so if you know the net profit, if you know the unrealized profit is hiding in the net profit of the seller, so solution obviously is I will need to reduce the net profit of the seller. Correct. I already know where is it hiding, so I just rectify it. I will need to reduce the net profit of the seller. Okay. So of course, if I want to reduce profit, in other words, profit, say, reduce your retained earning, correct? So if I want to retain earning, so the earning will be debit. So therefore, earning of the. Okay, right. So that's one part of the unrealized profit on trading. So the seller, net profit of the seller. Then the other part is definitely hiding in the closing inventory of the buyer. Right. Okay. The other portion is of the unrealized profit. It will be in the closing inventory of the buyer. Right. So of course, put it here. The other portion will be in the closing inventory of the buyer. Okay. So solution, I will need to reduce inventory. Right. So inventory is an asset. Inventory is an asset. To reduce as I will credit an asset. So for I will be of the buyer. Okay, right. So that's the first part. Hopefully, all is fine with you. But we have the problem is the question to do L. Right? Okay, they ask you to do a P&L. Now, so everybody know retained earning is a balance sheet item. Right? Retained earning will not appear in your P&L. So the problem is the question asks you to do a P&L. So how are you going to reflect the reduction of net profit? Because I do not have a retained earnings in my P&L. I cannot debit retained earnings. I cannot debit retained earnings because it will not be reflected in my P&L. So now we want to see if the question asks you to do P&L, how will you incorporate this part, reducing the net profit? Very simple. Now, so firstly, you must be very clear in your mind what is your objective. Right. Your objective here is very clear. You want to, the net you want to do, right? The objective is you want to reduce the net profit of the seller. Okay. So to reduce net profit of the seller, then very simple. What I can do, of course, is I can increase expense. But if I increase expense, it has the effect of reducing profit. Oh, can see or understand? If I increase expense, it has the effect of reducing profit. Okay, so therefore, if you want to reflect this transaction in your P&L, you just need to increase expense. And the expense you have chosen or rather they have chosen will be COGS of the seller. Okay, right. Okay, so therefore, if you are asked to do a P&L, right, then instead of debiting retained earning, then you will need to debit COGS of the seller. Okay, then of course your credit to be the same. Okay, now, so I seem to notice candidate have some problem with this account called COGS. Okay, now if you're having this problem, don't worry about COGS. So remember, what happens is we have expenses. There are so many expenses. So actually what happened is they classify into three main categories. COGS, right? Expenses is classified into three main categories. One is COGS. One is okay, and the last admin. I'm trying to say this. If you're having problem with COGS, don't worry about it. If you're having problem with COGS, just treat COGS as an expense. That's all. COGS is just a category of expense, right? Something like selling and distribution, this is expense, right? Administrative, these are expense, right? So same thing, COGS is just an expense. Okay, so if you are having problem with COGS, okay, so I just write here for you. So if you are having problem with COGS, just remember COGS is just a category of expense. So in other words, means to say just an expense. Okay, so that's this part. Unrealized profit or inventory. So when giving an exam, right, you just need to think. If you want to remember this double entry, you just need to ask yourself, right, where is the profit hiding? Okay, then inside your mind you remember. For this double entry, I can't think on the spot, of course. I need to hint myself first. I will just ask myself, where is the profit hiding? Okay, so this is my question. Then inside my head, I will try to turn. The profit is hiding in two places. One is in the net profit of the seller. Then the other part is in the claim is I need to reduce that profit. So I will debit RE of the seller. Then the other one is I need to reduce inventory of the buyer. So therefore, resulting debit RE and credit inventory. Okay, right. So that's how I remember. So remember, just ask yourself, where is the profit hiding? Okay, right. So next is intra-group sale of plant and equipment. Right. Okay. So it's intercompany sale of intercompany sale of PPE. Right. So same thing lah. I sell a machine. Right. I sell to myself a machine at a profit. Okay. I sell to myself a machine at a profit. So what do we do? Okay. So here are some guidelines. They say if one group entity sells non-current asset to another, adjustment must be made to recreate the situation. Right? So to summarize this thing, like this whole chunk here, to summarize this whole chunk here, it means in consolidation point of view, no sales has been taken place. Right? So two things you need to know. The first thing is this part. There profit on the sale, right? So remember, if there's any profit, you must remove it because console point of view means to say, I earn profit for myself. Okay, so first thing as usual, you need to remove all the profit, right? There would have been no profit on the sale. Okay, second thing is your depreciation, right? Depreciation would have been based on the original cost of the asset to the group. Right. Okay, so remember, in the first place, you cannot consider a sale because I sell to myself, right? So therefore, your depreciation, right, you cannot be using the price that you buy from your group company. Depreciation should be still be based on the original cost because there's no sale, right? I will tell you more on this part. Okay, but for console, remove any profit, right? Okay. Console first thing, remove the profit. And second thing you need to do is to adjust the depreciation, right? Okay, so remember there's no sale, there's no sale. Console point of view is not considered a sale. So if there's no sale, your depreciation should be based on the original cost. Okay, so I'll show you what's this. No, so do double entry. I can put here for you. This is talking about the number 1, and this is talking about 2. Okay, so now of course let's concentrate on number 1 first. Number 1 is remove the profit. So this whole chunk here is number 1. Right. Now you will want to do this part first. Okay, so plant 100, accumulate 100. So now we have a carrying value of 300. Right, so very easily, plant cost is 600, then accumulated dip 300, so therefore my carrying value is 300. So sales proceeds 400, easily I can calculate my profit is 100. Okay. So they mentioned depreciation is straight line, after life is 5 years. Okay. Okay. No, so as I said, we try to do the first part first, this part, removing the profit. So this one is the same as what I told you here for inventory. Ask yourself, where is the profit? Right, the double entry. Right. So the first question, where the profit? Hiding in 2 places. That's the same thing. One net profit of the seller, one is in, then I think will be easy. Right. So first one, we already know is the net profit of the seller. So what I need to do is I need to reduce net profit of the seller. Okay, so to remove net profit of the seller, of course, I will debit the in earning of the seller. Okay, so you it's important to know who is the seller. May not have to know who is the seller. Why? If you remember our workings earlier, our retained earning, we have parent and subsidiary, right? Retained earning workings. So you need to know exactly which RE you are going to debit. Whether you should debit the retained earning of the parent or the retained earning of the subsidiary. So it's important to know who is the seller, right? So that will determine whose retained earning you are going to debit, right? Okay, and the other unrealized profit portion is in the plant of the buyer, right? So therefore, what I need to do is I will need to reduce the plant of the buyer. So plant means PPE lah. Okay, so we have the same thing. We have the same problem. To say if the question asks you to do of reducing the net profit of the seller. Okay, so remember the same thing. So I will just keep it the same. Can I just cut and paste and do it? Okay. I just I do the cut. Right. Time to confirm. Okay, the only thing is okay, sorry, I can do it. Okay, on my I just give me a second. Okay, so objective is the net profit for seller. Right. So what you need to do, of course, to get reduce other income. Okay, so in the first place is hiding in other income. Reduce other income of the seller. Right? So therefore, I will need to debit okay, right. So if you're asked to do a P&L, so the debit, of course, you will debit your other income, seller, and the credit will still be the same. Okay, right. So that's the first part. Something similar to the unrealized profit on inventory. Okay. Now we are concentrating on the second part. So first, so just simply. And now, okay, so remember, before we talk about this part, remember, depreciation, right, should be based on the original cost. Because in console point of view, no sales has taken place. Depreciation, right? I should use back the original cost. I should use back all the original useful life because no sales has taken place. Okay, no sales has taken place is the keyword. So when I calculate my depreciation, I will use back the old cost. I will use back the old useful life. Okay, I ignore the new things. Right, okay, so let me show you what's happening here. Okay, so here, in consolidation point of view, a reminder, no sales has taken place. Right, so depreciation should be based on the original cost of the asset to the group. So everything should be based on the old cost. In this case, the old cost is $600, right? And the useful life is 10 years. So my depreciation figure, right, that should appear should be based on 600 divided by 10. Okay, it should be based on 600 divided by 10. which is 60. Right? But we have one problem because this B, right, this fella, this B would have depreciated based on 400. Now, remember it's 400? 400 is the price that he has paid. 400. In B's account, right, he will definitely calculate depreciation based on the price he has paid, 400, and based on the remaining useful life, 5 years. So B would have calculated depreciation based on 400 divided by 5, right? So that's the situation. B would have calculated the depreciation based on 400 divided by 5, right? Then of course, that will be 80. So do you see we have something called the excess depreciation, right? So depreciation that should be reported in the console account is supposed to be 60, but now it's reported at 80. So therefore, we have an excess depreciation of 20. Okay, right. So very simple, excess depreciation, right? So just think about it. What is the implication? The implication here is the buyer, right, has over depreciated the asset. Okay, so that's the problem. Buyer has over depreciated the asset. Okay, can see buyer has over depreciated the asset. So let me write for you here. B actually means buyer. Okay, so that's the problem. Your buyer has over depreciated the asset. Okay, so of course you can't liquid paper. The same thing. You need to pass one double entry. So you have over depreciated. So obviously you need to reduce your depreciation. The normal double entry for depreciation is debit, depreciation and credit accumulated. In other words, means to say is debit expense, credit your asset. That's will increase. If I want to reduce, of course, must be the opposite. So opposite must be debit your asset, right? Here, debit PPE, and then credit your depreciation. So credit credit your P&L, right? That credit your depreciation is credit your P&L. So I will credit the retained earning. And the problem is with the buyer. So I'll credit the retained earnings of the buyer, right? Okay. Let me just draw arrows here. Why buyer? Because buyer has over depreciated the asset. Okay, right. So same thing. If the question asks you to do the SOCI, where should I put here? Okay, so usually depreciation they will put as admin expense, right? So the credit will the expense you choose is admin expense. Okay, right. So that's the second part of consolidation. Hopefully you survive. So now we need to practice some questions. Right. Okay, so I will continue with the questions here. Okay, so same thing. If you need to take a picture, please take a picture. We are going to look at this question now. Okay, now just be in case I forget okay, just in case I forget. Now tomorrow, right? In case I forget, I better tell you now. If possible, you try to bring a computer. Right? Okay. For tomorrow, if possible, try to use a computer. Okay, tomorrow, because I would want to show you how to use your Excel to do your computer base. Okay, so if possible, right? If you are possible, then you try to use a computer. If not, then you can just of course, all these are recorded. You can I think FTMS will send to you. Then if you can't catch, you can always watch the recording again. Okay, I just want to show you how to do the exam question in Excel. Okay, can. So tomorrow, if possible, try to use a computer. Okay. Come back here. Okay, right. So as the name of this question imply, right, this whole thing is about intercompany balances. Right, the focus is on intercompany balances. Right, okay, so I'll show you. So we have PPE, investment. Then we have a current account with P. So of course, current account with P is intercompany balances. Then dividend from S. So this is actually dividend receivable. So it's also interco balances. Right, then current account with S is also a interco balances, and dividend payable also interco balances. Right, so as you can see, the whole thing is filled with intercompany balances. That's what the name of the question implied. Okay. Right, so P acquire 50% of S ordinary shares on 31st December 2018. Right, so 31st December 2018 is the DOA, when its retained earnings were 5 million. Right, so 5 million, of course, must be the SRE at DOA. Right, then P subscribed 75% of the debenture issued by S in January 2020. Right, okay, so let's talk about this part first. This part. He subscribed 75% of the debenture. Okay, so of course, in accounting point of view, rather in console point of view, means to say I subscribe to my own debenture. So this is not valid. You need to remove it. Right? Okay, remove it. So how to remove it? To remove this, right, you need to think where is the original account. Okay, what are the original account that they have used? So do you see P subscribed 75% of the debenture issued by S? So what happened? P subscribed 75% of the debenture issued by S. So P would have recorded this transaction as what? P subscribed to debenture. So in P, right, they would have recorded this as an investment. Correct? So P will have recorded here under investment, right? Then S, right, would have recorded as debenture. And see, so P recorded as asset, then S recorded as debenture. So this is the original entry. So all these are not valid because they are intercompany, so I need to remove it. Okay, so if I know originally where they have recorded, then it will be easy for us. So as I said just now, P has recorded in asset, so I need to remove it. Remove asset, I will need to credit the asset called investment. So I will credit investment. Can see? Okay, so I just need to know where they have debited or credited the original account. Then once I know that, then easily done. Then S, as I say, S would have recorded in debenture, right? So debenture is liability. So I need to remove liability. To remove liability, I will need to debit a 10% debenture. Okay, so that's how you think about it. Okay, so I don't really force you to memorize. Okay, I just ask you to use the logic, right? So just think originally where they park the accounts, right? Originally, just know where they park the accounts. Once you know where they park the accounts, then everything will be easy. Okay, right. Then next, shortly before the year, P had remitted a check to S for 1 million. S has neither received nor recorded the check. Okay, so he is actually cash in transit, right? P had remitted a check to S for 1 million. S has neither received or recorded the check, right? Okay, so this is actually something called a cash in transit. Okay, so don't worry about the name. The name is nothing fantastic. So to me, is P had remitted a check to S for 1 million. Then S has neither received nor recorded the check. Okay, so to me, although the name is called cash in transit, but the double entry is just receiving money from customer, right? So when you receive money from customer, what you will do, you will debit cash and credit receivable, correct? So that's the double entry for cash in transit. Debit cash and credit a receivable, right? So in this case, this who never do it? S never do it, right? So you will need to debit cash and credit. In S point of view, so remember, it's S never do it. So I need to look at my S account, which is here, this chunk here. So I need to credit a receivable. So receivable must fall under this category. You can see current account with P, right? So this is an asset. So cash in transit, debit cash, and credit receivable, right? Okay. So I'll credit a current account with P. Like that. Okay, right. So these are the accounting entry, all about intercompany balances. After this, I hope your intercompany balances should be very strong. Okay, then so let's now look at the workings. Workings here. Okay, need you to turn a few pages behind. Okay, elimination of intergroup balances. So as usual, we have the retained earnings, 42, and the other one is 15. Okay, then next is the fair value of subsidiary net asset at date of acquisition. Okay, right. So S share capital is 20, and the retained earnings of S is 5 million at date of acquisition. So 5 and 20. Right. Okay, so here I will have 5. Okay, so here I have OSC. Okay, right, so total 25. %60%, right? So here. So 60% times 25. $15. Right, and the other one, 25 times 40%. That. Okay, so your COI. COI is your COI given by the question. Okay, anyways, here I didn't show you. P acquires 60% of S ordinary share, cost 22 million. Right, so this is actually your COI. Right, cost 22 million. So 22 million is your COI. So you can put it there. And 15 here. So goodwill will be 7. Right, so therefore, I will debit goodwill. Debit OSC. Debit retained earnings. Credit COI. And credit NCI. Okay, right, the numbers are there. So this will be 7. This will be 20. Retained earnings 5. COI 22. NCI 10. Okay, so update your retained earnings of 5. So here I will minus 5. Pre-acquisition 10. So here I will have a post-acquisition. Okay, then of course on the next page are all your intercompany balances, which some of it already written for you. The first one is the intercompany debenture with investment. Okay, so this is the one which I have written here. Okay, this one, debit 10% debenture and credit investment. Okay, the only thing is you have no number. So the number is you P subscribe 75%. So 75% multiplied by 12. That will be the number, right? 75% times 12, and this double entry. Okay, so just remember, you need to know originally where they have parked the account. If you know originally where they have parked the account, when you remove them, it will be easy. Okay, so here I will debit 10% debenture, and I will credit investment. Okay, and the amount you mentioned is 75% times 12, right? So that will be 9. Okay, then next we have cash in transit. So cash in transit, I already show you, which is here, this double entry, cash in transit. You will debit cash and credit current account with P, right? Okay, so here. Debit cash and credit current account with P, which is 1. Okay, right. Then next, this one is the normal stuff, right? The intercompany balances. So remember, if originally they have recorded as liability, you need to remove it. To remove liability, I will need to debit. If originally they have included it as asset, to remove asset, I will need to credit. Okay, so the first one is talking about current account. Then the other one is dividend receivable. Okay, so for current account, one party recorded as liability, correct? The liability one is here. This is liability. So current account with S is the liability, right? Okay. Then current account with P is the asset. Okay, but before you do that, you have to be very careful. Okay. Now, if you remember this entry, all right? Okay, this entry you're supposed to credit a current account with P. Okay, current account with P. So if you look at the question, right, you will notice something. Before you can eliminate, before you can remove it, one number is 3, one number is 2. Right? So before you can remove it, you have to ensure these two numbers is the same. Then you remove it. Right? So now it's not the same. One is 3, one is 2. Right? It's not the same because you have not updated the numbers here. You're supposed to credit a current account with P of 1, right? Which is an asset. So current account with P, you need to credit. So minus 1, I will get a 2 here. Okay, then now I can remove it. Debit the liability account, current account with S, and credit current account with P. Okay. Okay, then for the dividend part, right? So dividend part, one is recorded as like dividend payable, right? One is the dividend payable, and the other one is dividend from S, right? So remove the liability account, debit dividend payable, and credit current credit dividend from S, right? And the dimension is how much is it, right? Okay, so how much is it? I think quite clear cut, must be 18 because this is dividend from S, 18 the amount. Okay, so let me just write down first. Here. debit dividend payable, right? And then credit dividend from S18. Okay, now of course, if you are not comfortable with this 18, there's another way you can do it, right? So I look at this 18 is because it's given to me by the question. The dividend is actually 18, right? Okay, they already tell me it's 18. Right, so of course, as I say, if you're not so confident, what you can do is this dividend payable is 30, right? You just take your share, 30 times 60%, right? Okay, 30 plus 60, 30 times 60%. Actually, I'll get 18 also. Okay, right. Then of course, the last one, you can leave it to here, right? Okay, so the last one is here. NCI is 40%, right? Okay, 6 here. $48. Okay, right. So of course, if you want, you can write the double entry for the 4. Debit RE and credit NCI. Okay, right. So with that, let me just update the balance sheet. Right, let me just update the balance sheet. So look at your own account. The first one is debit 207 OSC. So I own accounts. So I debit goodwill 7. So here I will add a 7. Then second one, debit OSC 20. So OSC I will minus 20. Then retained earning, I already have the answer. Retained earning is 48. 48. Right. Then next is COI minus 22. So COI, of course, you will appear under the investment minus 22. Then NCI 10. So here at a 10. That's number 1. Next, number 2. Number 2 is debit your 10% debenture. So if you debit debenture, means to say you debit a liability, you will minus 9, and you credit an investment. So if you credit investment, means to say you are reducing asset, you will minus 9 here, right? Then next is the cash in transit. Cash in transit, you will debit cash. So debit cash means add 1, and you will credit a current account with P. Okay, so credit means to say minus credit asset, right? Then next, you debit a current account with S. Liability debit means minus, and you credit a current account with P, minus. Okay, then dividend payable, debit dividend payable means a minus, and credit a dividend from S, minus. Right, and lastly, the retained earnings, NCI share of post-acquisition RE, debit RE, you will not care, and you will just credit NCI form. Okay. Okay, right. So next, of course, is the next question. The next question is this. Intra-group transaction with unrealized profit. Okay, so we have unrealized profit. So basically for this question, right, the purpose of including this question is I just want to show you how to get the number. Okay, so I think everybody know unrealized profit on inventory. If I just write the name of this double entry, it's called unrealized profit on inventory. Okay, so if you remember, unrealized profit on inventory is you need to know where's the profit hiding. The profit is hiding in two places. One is hiding in the net profit of the seller, need to debit retained earnings of the seller. And the other portion, the profit is hiding in the inventory of the buyer. So I need to credit inventory. The purpose is to show you the number. Okay, right. So how to get the number? So that's why we have this example. So in the post-acquisition, P sold goods to S for 90 million, right? Okay, 90 million at a markup of 50%. So there's a markup of 50%, and 90 million is the selling price. Firstly, you will need to determine how much is the profit. Okay, to get a profit, there are many ways to do it. So, as long as you can get the answer, it's fine. The answer is 30. Yeah? The profit is 30. If they tell you selling price is 90, markup percentage of 50%, the profit is calculated at 90. So as I say, there are many methods to do it. So whatever method you are using, if you get 30, then that will be fine. Okay, so I just show you my method. Usually I will use 90, right? Since it's a markup. So 90, I will divide it by 150. Okay, then times 50. So I will get 30 here. Okay, so that's how I get 30. Now, so I have two situations here. Okay, two situations. The first situation is all the goods are still in inventory. Right, so the second scenario, during the year sold 54 for 70. Right, okay, so two different scenarios. So let me show you how to do it. So I put here, this is situation number 1, and this is situation number 2. Okay, so remember, ultimately, what you are trying to do is you are trying to find the figure for the double entry. So I got two scenarios. One is for number 1, and one is for number 2. Okay, so let's do the first scenario first. To calculate unrealized profit on inventory, right, you will need 3 lines. Right, you will need 3 lines. The first one is profit. Okay, the second line is percentage unsold. Right, then the last line is the answer called unrealized profit. Okay, so profit is already calculated, 30. Percentage unsold, they mention all the goods. Right, so all the goods, it means 100%. Right, so 100%, it means 30. Okay, right. So therefore, for the first scenario, your retained earning will be 30 here. Like that. Okay, then the second scenario, the same thing. To find unrealized profit, you need to find three numbers. One is the profit. Then you have a percentage unsold. And you have unrealized profit. All right, so profit in this case, again, you have already calculated 30. So percentage unsold. So you need to read the question for information. So what they mentioned is during the year, S sold 54. Right, you sold 54. So of course the portion that is unsold must be what, right? You sold 54. So if you want to calculate unsold, you just need to use your 90 minus 54. That will be the portion that is unsold. Right? 90 minus 54. Okay, so I'll put it here. To calculate the percentage unsold, I just need to use 90 minus 54 over. Then, of course, I just to express into percentage. Right, so if I do that, 90 minus 54 divided by 90, I'll get 40%. Right, so 40% times 30, I will get 12 here. Right, okay, so for scenario number 2, the unrealized profit will be 12. Okay, right, so this question, as I say, the purpose is to show you how to get the numbers, calculating unrealized profit. So remember, if you want to calculate unrealized profit on inventory, always have 3 lines: profit, percentage, unsold, and unrealized profit. Okay. All right. Okay. So the next one, right, is something very challenging, right? So this one is very challenging. So as usual, if you need to take a picture, please take a picture and read this question carefully. This, I think, will be one of your hardest questions for today. Okay. Read this question carefully. We shall start shortly.